Here we are going to start with our original topic, which is journal. But of course, this is also somewhat like introduction topic only. Before knowing about journal, okay, before knowing about journal, we are required to know golden rules of accounting. There are three golden rules of accounting. What are those? First of all, there are three types of accounts: personal account, real account, nominal account. These are the three accounts which we are going to have in our accounts. While we are solving our accountancy part, we need to look at which type of account we are doing: personal account, real account, or a nominal account. These are the three types of accounts we are going to have. So let us deal with this personal account, real account, and nominal account now. First of all, personal account. Okay, personal account we are going to deal with. There are in this personal account also there are three types of accounts. What are those? Natural personal account, artificial personal account, and representative personal account. Okay, so for this personal accounts, what is it mean by personal account? The personal account in the sense it is the accounts which are dealt with the names of the persons. Okay, they are dealt with names of the persons. Natural personal account in the sense the names of the persons which are Rama, Ram, Sita, etc. Right? So Rama account, Ram account, Sita account, etc. These are the accounts. So every personal account will have two types of things: debit side and credit side. Okay, I'm going to write debit with dr and credit with cr. This is the usual notation of debit and credit. Okay, natural personal account that deals with natural names of the persons: Rama, Lakshman, Hanuman, etc. Yeah. Okay, artificial personal account. Artificial personal account in the sense these are the types of personal accounts which are like companies, name of the companies which we are going to have, names of company. Okay, bank, etc. These are all related to artificial personal account. And in this representative personal accounts there are six type of accounts: outstanding expense, prepaid expense. Okay, only four: outstanding expense, prepaid expense, accrued income, and advance received income. These are the four types of yeah. Okay, these are the four types of accounts. I think there will be two more. I'll let you know that afterwards. Okay, these are the four type of uh, explaining. These are the representative personal accounts. That means what? This this will the names will not be dealt with the names of the persons, but they represent the personal accounts of the related parties. Eco- um, uh, about these four accounts we are going to deal with in final accounts also, but we are required to know what are the balances of these four accounts. I mean, outstanding expense, prepaid expense, accrued income, advance received income. I'm going to explain you them. First of all, what is the thing? Outstanding expenditure. Usually, before if you are required to calculate, if you are required to know the entries of this one, you are required to know the balances of these expenses. That means which side, which in which side they will be coming, either debit side or credit side. We are required to calculate, we are required to know. Okay, outstanding expenditure, this is an expenditure which we are required to pay. For example, rupees 1000 is paid to Ram. That means the payment has already been completed, and rupees 1000 is payable to Ram. See, we can see that there will be some difference in this paid and payable. Paid is the sense that the transaction has already been completed, right? Whereas we are required to know what is it meant by payable. That means payable. We are required to pay. We haven't paid now. We are required to pay in future. That is outstanding expenditure. Outstanding expenditure in the sense we are liable to pay to Ram, right? Therefore, it is liability. Outstanding expenditure is a liability. Okay, if we are required to receive anything, received. Okay, if we are required to receivable in the sense asset, payable in the sense liability. Payable in the sense liability. Okay, in the questions they will be confusing us. Rupees 1000 is payable to ourselves by Ram. See, but if we see that we are going to understand that the payable is there, then it is a liability. But who is paying? Ram is paying to ourselves. That means we are receiving it. So it will be a like asset. We are receivable in the sense we are trading at the amount as asset. If we are seeing that though the payable word is written here, it doesn't mean that always payable in the sense it is a liability. No, payable is like an asset to receiver. Okay, payable is like an asset to receiver. It is a liability to payer. Receivable is like an asset to receiver, and per payable for payer it is payable, right? It is like a liability to him. So what is the nature of this asset and what is the nature of this liability? Liability will always be written on credit side. Asset is always recorded on debit side. I repeat, liability we are required to know that on credit side. Asset we are required to have debit balance and credit balance. As outstanding expense is the expense which we are still payable, then we are going to treat it as a liability. Liability in the sense it is having credit balance. First thing has been completed. Second thing, prepaid expense. Means what? We are already, we have already paid the expenditure. See, prepaid and postpaid, we are going to see in our SIM card mobiles, right? Prepaid in the sense what? We have already paid the amount for which we are going to use the service, right? Postpaid in the sense what? We are using the service right now. After using the service, we are going to pay the amount for what we have used, right? So the same thing which we are having here is prepaid expense. The expense has already been paid, but the service is renderable. That means we need to receive the service, right? So if we can relate this one to this one with that of SIM card mobiles. So prepaid in the sense what? We have already paid the amount, we are still receivable of the service. We haven't received a service, so the service is still receivable. So the nature of prepaid expense is like asset. It is like an asset, and it will show as asset in the balance sheet. The asset is there, then it is having debit balance. Accrued income. Fourth one is what? Advance received income. This is somewhat different but that of first two. Okay. Accrued income is also known as receivable income. Income has been accrued, we are going to say. Accrued in the sense receivable. If the amount is receivable, then what we are going to call it as asset, right? And why it is receivable income? We have rendered our services, but we have the amount is not at all payable. That means we haven't received the amount. That means the amount is still receivable for us. If the amount is receivable for the receiver, then it is like an asset, right? So amount receivable or accrued income is nothing but receivable income. So it is like an asset to the receiver, and it is payable for the payer, right? Advance received income. Advance received in the income in the sense what? Advance received income is like advance received income. So it is like advance. We haven't rendered our services. Okay. Let us say rupees 1000 has been received as advance for service. Okay. If the amount has already been received as an advance, that means before rendering the services, the amount has already been received. Okay. If the amount has already been received before rendering the services, then the service is still rendered to, that will be rendered to the receiver, right? We are required to provide our service. That means our liability is what? To provide the service. If the service has already been provided but the amount is not received till now, then it is known as a receivable amount. But we haven't provided our services, and amount has already been received as an advance for providing the service. So it is like liability, right? Yeah, one more. These two things are what? Capital and drawings. These are the six representative personal accounts. So if the amount is treated as a liability, then it will be having what? Credit balance. If the amount is like an asset, it is having debit balance. Fifth and sixth is what? Capital, drawings. Capital is the point which is very important. And of course, if we are required to know the capital, then drawings automatically we can know. Okay. Capital is very important point. It directly represents the owner. He directly represents the owner. Okay, I repeat, capital is the word which will be used to represent the owner. This is the best example for representative personal account. Why it is and I'll tell you the nature of this account. It is like a liability. Okay, but of course it is not. It is liability to the business, and it will be shown on the liability side of the balance sheet, and it will be having credit side. I'll let you know these two accounts. First of all, the relevant sides, and it is like drawings is like an asset, so it will be shown as a subtraction. Okay, it will be shown as subtraction from drawing from capital. If you are not required to subtraction from the capital, then we can show it like an asset. Okay, and the asset side of the balance sheet. So what does it mean by capital? We are required to know what does it mean by capital. You know, capital is the amount which will be amount I have already explained you in the first lecture only. Amount introduced by the sole proprietor to start the business. Okay, this is the amount. Capital is the amount which will be introduced by the sole proprietor to start the business. It can be in the form of money, that is, or amount, or cash, or you can bring check also. It can be like asset also. He can bring asset also, like he can bring plant and machinery directly, the opening plant and machinery which he has already purchased, and he can bring that same asset to start the business. Okay, example, plant and machinery, furniture, etc. So the capital can be in the form of amount, that is money, or can be found in the form of asset also. Okay, what about capital? Capital is the amount which will be introduced by the sole proprietor to the business. So as it is the amount which is introduced by the sole proprietor to start the business. And one main rule in the accountancy is what we are required to see in the perspective or in the view of business only. We are required to think in the view of business point of view only. We are required to make estimations or anything. Okay, then I have discussed with capital. Whenever capital is brought into business, then business is receiving the capital, right? That business is receiving the capital. Then if any profit or loss whichever is arranged, that will be added to capital or that will be subtracted from the capital. As what is this capital? This is owner's property, right? Owner's property. At the time of liquidation or at the time of wounding up of the business, this capital is payable to whom? This capital is paid back to, or it is taken over by owner, right? It will be taken over by owner at the time of liquidation, at the time of wound up of the business. So what I can say here is capital is like a permanent liability. We are required to think in the point of view of business. So for business, capital is permanent liability. So what does it mean by drawings? Drawings is the amount which is withdrawn. Okay, what is it mean by drawings? Amount which is withdrawn. The amount drawings in the sense what? Drawings is the amount withdrawn. Once again, Amount withdrawn by owners. I'm sorry for the writing. Yeah, this is the amount withdrawn by the owners. Amount withdrawn by the owners from capital. Okay, drawings in the sense which is the amount withdrawn by the capital by the owners from capital. This amount withdrawn can be in the form of cash, or he may take over goods also. So drawings can be taken over in the form of cash, in the form of goods. If the amount has already been withdrawn in the form of cash by the proprietor, by the owner, then this will be separated from bank account balance. So bank balance from it will be subtracted. And if if the goods have been withdrawn in the form of goods, it will be separated from purchases. Okay, it will be separated from purchases, and overall the total amount which has been withdrawn in the form in the, withdrawn for personal use. Yeah, amount withdrawn by owners from capital for personal use. This is very important point. If the amount has only withdrawn for personal use only, if the amount has been withdrawn for our usage, for owns for personal purpose, then only it will be subtracted from capital. Otherwise it will not be separated from the capital. It will be treated as like contra entry, which will be seeing in cash book. So these are the 6 type of representative personal accounts, and I wanted to confirm you one more point, which is bank and bank balance. Bank and bank balance. Okay, this bank in the sense is the account which will hold by the which will be holded by the person in the bank, right? This is the what we can say bank account. We are going to take it as bank account. This bank account is the account which we are going to be our proprietor, or any person will be holding in the bank. So it is like a personal account. So bank account is a personal account, whereas bank balance we are going to treat it as asset. If it is having debit balance, if the amount is having debit balance, then we are going to treat it as asset. But as it is like a bank, then the overdraft may also be there. For the overdraft, in a sense, it is like a liability, appu we can say in Telugu. Okay, if the amount is if the amount has been taken by the proprietor from the bank as liability from the bank, that the bank balance can also be like liability also. So it is like a real account. So bank balance is what? Bank balance is real account. It will be taken as asset if the amount is having debit balance. Bank balance is an asset, and bank overdraft is a liability. Okay, bank overdraft is a liability. So these are the things which we in most of these three accounts, the personal account, real account, and nominal accounts, this personal account plays very important point. So now we are going to see about real account, and after we have seen this real account and nominal account, we are going to see the golden rules of accounting related to those three accounts only. Okay, real account. These are the accounts which will directly shown in balance sheet. We are going to show this balance sheet as the in asset side or a liability side. Liability side includes what? Capital plus other liabilities. assets, every assets will be included in the form of real account only. And what are these nominal accounts? Nothing much, we are going to deal with real account and nominal account. And of course, examples we are required to know, right? Examples: plant and machinery, furniture and fixtures, loose tools, car, motor vehicles, etc. These are all real accounts. This will be coming under real accounts if they are if they are used for business purpose. If they are used for personal purpose, then they will be treated as the personal accounts only. And what is the nominal accounts? Here, all expenses, losses, incomes, and gains. All these four things will be coming under nominal accounts. And nominal balances, nominal accounts, which we are going to deal in trading account and P&L account, or trading and P&L account, which we are going to deal with. And these expenses, all the expenses and losses, incomes and gains will be transferred to nominal accounts. And afterwards, afterwards nominal accounts are directly transferred to what? Directly transferred to capital account. Why? Because through these expenses, losses, incomes and gains, we are going to know profit or loss, right? This profit or loss is however transferred to capital. So this is the point regarding these three accounts. These first two lectures might be boring for you, but when we go through the journal topic from that onwards, that this will be like super. Okay. This introduction part is very important. If you don't know the introduction part, we cannot deal with accounts. And now comes, I'm going to write with another pen. Golden rules of accounting. What are these golden rules of accounting? Again, for this we are going to see three accounts, the same accounts which you have seen above. First one is what? Personal account. We are having personal account rule, real account rule, these are the three rules which we are going to see, which we are required to see, which we are required to by heart, that should be coming from our hearts. That should not be we need to remember those accounts until our last breath. Like that, we need to remember these three account rules, because these are the three rules which play whole portion in our accounts. These are the three rules which we are going to take care of over the whole account. What are those three rules? Personal account rule: debit the receiver, credit the giver. I repeat. What is the rule for personal account? Debit the receiver, credit the giver. Real account rule: debit what comes in, credit what goes out. I think you are noting down this one. Okay. we are required to note it down so that this will be useful for your whole life. Nominal account rule. Nominal account rule is nothing but what? Debit all expenses and losses, credit all incomes and gains. That is the reason why I have treated these two at a time. These two at a time. Okay. Debit all expenses and losses, credit all incomes and gains. These are the three rules which we are required to remember for a whole accounting period life. Okay. In the personal account, the receiver is made debit and the giver is made credit. Okay. How we are required to write the journal entries? If you are required to write the journal entries, if you are required to write the journal entries, and afterwards if you are required to, what is our accounting journey, where we are going to start with our journal and we are going to prepare ledger accounts. After that we are going to prepare trial balance, which shows arithmetical accuracy. After preparation of trial balance we are going to prepare final accounts. This is our journey, right? If you are required to prepare a final account, then we are required to prepare what? Journal. If we are required to prepare trial balance, that will be dependent on journal. Ledger is however dependent upon journal only. So in order to write these journal entries and ledger postings, we are required to do all these things. We are required to know these three entries, these three golden rules of accounts. That is why I have written them in golden color. I didn't write it by wantedly. I did not write. It has come directly. Okay. These are the three account rules which we are required to remember for whole accounting life. Okay. Personal rule: debit the receiver, credit the giver. Real account: debit what comes in and credit what goes out. Nominal: debit all expenses and losses, credit all incomes and gains. This is the three accounts, three golden rules of accounting which you are required to remember for a long period of time. 1 second. Okay. So I'll wind up the lecture within 2 minutes. So what we have discussed in this lecture, we have discussed about three accounts and their respective rules also we have noticed. First one is what? Personal account. In this personal account we are also having three type of accounts, which is what? Natural personal account, artificial personal account, representative personal accounts. So under these representative personal accounts, which we have discussed six type of accounts. What is that? Outstanding expenditure, prepaid expenditure, outstanding expenditure, prepaid expenditure, accrued income, advance received income, capital, drawings. Real account. Under this real account, natural account deals with names of the persons, artificial names of the companies, firms, etc. Ram and Co, Vishwa and Co. Okay. Real account deal with assets and liabilities. Okay, asset A is assets and L is the liabilities. Nominal account deals with what? I'm writing normal. I'm not. That is not correct one. Normal account deals with what? Expenses and losses. Incomes and gains. Okay, what are the golden rules of accounting? For personal account, debit the receiver and credit the giver. For all these three accounts, this is the simple only golden rule. This is the only golden rule. For what is the real account rule? Real account rule: debit what comes in, credit what goes out. Nominal rule, expenses and losses, we need to debit all expenses and losses, credit all incomes and gains. Okay, that will be also treated like credit all gains and incomes, debit all losses and expenses. It the some different teachers might explain in different manner. I know this manner, so I'm explaining in this thing. That's it. So that's it all for this lecture, friends. We can discuss the remaining. We are going to start our general episode tomorrow from the next video onwards. So thank you for watching, and if you like my videos, please subscribe my channel. Please like my videos. Okay, subscribe my channel. Thank you.